Why is it that we are not charging the same amount of tariffs on the same products going back and forth? Why not? Especially automobiles. Why is it that, and I forget what it is, but I believe our cars have a much higher tariff, um, I think, than than the tariffs that we charge Europe. And so I just think that it's fairness. Now, what I said before was, I think there's another side to the equation, right? So, what if you are country A and you get this notification as of April 2nd, we are going to tariff you reciprocally to what you're tariffing us? So, do you think that the other side might go, we got to work something out. We don't want this. What can we do? So they call and they have their people call and they go, so what can we do so that we don't have this happen on April 2nd? So all of this is going on that we don't know, right? We don't know the back and forth, and we never will. So when Trump says, well, I made a deal with Canada, oh, I made a deal with Mexico, or I made a deal with the UK, or you know what, Australia is going to do this and let us do that, whatever it is, great. Let them make deals. Let's get something that's fair. But the investor community looks at it as they can't count on it. Are we going to tariff or are we not going to tariff? Are we going to get nervous about it or are we not going to get nervous about it? So, in the investor crowd is different. It's a strange animal. They want certainty. Even if certainty is bad, that's good because it means they can position. Do you know what I mean? And Trump provides uncertainty. And so, a long answer to your question, if he changed his mind on tariffs, I believe that the uncertainty scenario of what's going on will cause investors to sell, hedge, move the markets lower. And so that's why I have April 4th expiration on my mind, April 11th, because I think that the uncertainty, whether the tariffs go through or not, um, I think it's the uncertainty that'll cause things to go further south, on top of potentially reinflation, massive layoffs, things like that. So we'll see. We'll see. But that's the long winded answer. So JP Morgan, strong boy. When we get a rebound, it rebounds, and when we get a drop off, it drops off. And this is strong. But I do see JP Morgan as a potential short. Let's look at the US dollar. Very interesting chart. I have been talking about this for quite a while. Unfortunately, the timing of some of the trades that I took, that didn't materialize. It was just a bump. That didn't materialize. That didn't materialize. Look at this failure here. And so here we are again. Here you go again. We are now 2 days above the mid of the Bollinger Bands. You still got plenty of room to go here. When you look at the weekly chart of the dollar, not even close to being overbought. Plenty of room to get to the mid, to the upper Bollinger. There's lots of room to get up here. So is now the time? We'll see. The dollar going higher, if it continues to go higher, you're going to see further pullbacks on metals. So is it time to start thinking about taking a short on gold, right? Maybe GDX could be a better play here, less expensive. What about silver? Silver and GDX lining up. And then there's copper. So now copper is interesting. Copper, because of how it's bought, how much China buys, there's just an interesting dynamic with copper. It can go the opposite way of the dollar, but I'll give you another little prediction. I think copper may be the outlier in 2025. There, I said it again, another prediction. I think copper might be the honey badger that screams higher. And there's a few reasons for that, which I'm not going to get into now. But just put a pin in it, so to speak. And if you want to throw something in your wealth machine, I don't know, get a dozen shares of copper using the proxy FCX. So I'm not going to trade copper to the downside only because I just have a feeling that out of all of the metals, this will continue to do really well. I do like the idea of perhaps shorting gold or GDX. And if I do that, it might make sense for us to just take a hedge at some point on silver in case it reverses. So we'll see. The other industry, the other sector really, that could benefit from the dollar going higher, or not really benefit, but in terms of us trading, a trading benefit, would be Chinese stocks could take a beating. And they already are starting to take a beating. And now we got 2 days below the 20. There's your FXI. Maybe we start looking at some trades here for potentially May might be interesting. Maybe put on some May monthlies for FXI. And in the meantime, let's shorter term something like Baba. So Baba looks like it really would like to fall apart. Maybe, I don't know. So this is the duck. It's not a dragon. It's a duck. And so I see that perhaps this just goes whack and then down to here or down to here. And if the dollar moves higher, these would be great trades for Alibaba.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.